Let us see our next question. Miss Sunidhi is working with an MNC at Mumbai. She is well conversant with the portfolio management techniques and wants to test one of the technique on an equity fund she has constructed and compared the gain and the losses from the technique with those of passive buy and hold strategy. The fund consisting of equity only and ending NAV of the fund she constructed for the last 6 months are given below. So we have been provided with the NAV for the last 6 months: December, January, February, March, April, and May. Assume Sunidhi has had invested a notional amount of 2 lakhs equally in the equity fund and conservative portfolio, that is bond or debt financing, in the beginning of December 2019, and the total portfolio was being rebalanced each time the NAV of the fund increased or decreased by 15%. You are required to determine value of the portfolio for each level of the NAV following the constant ratio plan. That is the question. Please go through the information of the question. Then we are going to discuss how to make calculation of answer. Friends, before I give a detailed explanation to you about the question, I want to prepare one working note. Why do we prepare that working note? I'll explain that to you, say, in the coming portion of the question. We are following, first of all, constant ratio plan. What is constant ratio plan? That is also what I'm explaining to you. And along with that, say, you have been provided with the information about the buy and hold strategy. It is a passive strategy. What does that mean? That is also what I'm explaining to you in the coming portion. But first of all, say we are preparing a working note for the constant ratio plan. So write down heading constant ratio plan. In that, working note number 1, calculation of percentage change in net asset value on monthly basis. That is the first working note that we are preparing. Why do we prepare? I just explained to you in 5 minutes of time. Column number 1 is month. Column number 2 is net asset value. Column number 3 is percentage change in NAV. So in the month column, I am writing December. NAV I am writing 40 rupees. Again in the month column, I am writing January. NAV I am writing 25 rupees. So percentage change in NAV will be found as 25 minus 40 upon 40 into 100. So 25 minus 40 is negative 15 upon 40 into 100 is negative 37.5. Next is February month. Net asset value is 36. So percentage change in NAV is 36 minus 25 upon 25 into 100. So 36 minus 25 is 11 divided by 25 into 100, it comes to 44%. Then the month of March, The NAV is 32 rupees. It is 32 rupees. So what will happen, dear students? 32 minus 36 upon 36 into 100. So 32 minus 36 is negative 4 upon 36 into 100 is negative 11.11 percentage. After March it is April. In the month of April it is 38. So it is 38 minus 32 divided by 32 into 100. 18.75 percentage. Then last is the May month. In that NAV is 37. So it is 37 minus 38 divided by 38 into 100. 37 minus 38, that is negative 1 upon 38 into 100, that is 2.63 percentage. That is negative. This is the way the percentage change in NAV is supposed to be calculated on monthly basis. So this is the way we have made computation of, first of all, percentage change in NAV on monthly basis. Why do we make this calculation? Let us have understanding of the same. Dear students, in case of the constant ratio plan, they have provided with the information like this. Passive buy and hold strategy I am explaining to you later on. But first of all, I want to focus on the constant ratio plan. The question is providing the information that an investor called Miss Sunidhi, she wants to make investment of rupees 2 lakhs, and she wants to know if at all she follows constant ratio plan. What is the ratio? They have provided to us, that is with us, with the information that equal investment is made in equity and say in debt. So 2 lakhs divided by 2. So 1 lakh rupee will be invested in equity and 1 lakh rupee will be invested in debt. That is the way, say you will start with the portfolio. That is the first thing. Second thing is that, say they have provided that, say they will be doing in a way that, say she will be doing rebalancing on monthly basis. Every time that is, say whether she is going to reshuffle the portfolio, the answer is no. She is going to reshuffle the portfolio only if the percentage change in the NAV is more than 15 percentage. It might have gone up or it might have gone down. In either of the case, so the percentage change in the NAV, so should be 15 percentage. Then in that case, say she is going to reshuffle the portfolio so that, so the amount of the equity and debt should be equal. So what will happen over here? Looking to this table that, say we have prepared, we can understand that, say in the month of January, so the percentage change is more than 15 percentage. So of course you are required to do the reshuffling of the portfolio. February, yes. March, no, you don't have to reshuffle. Why? Because we understand that, say the percentage change is less than 15 percentage. 18.75, yes. In the month of May, you are not supposed to reshuffle the portfolio. So first of all, we will prepare a working that what will be the value of the portfolio based on constant ratio plan once you do reshuffling, say till the month of May. In the month of May, of course, you are not going to reshuffle, but you are supposed to make the computation of the value of the portfolio. Whatever this answer that, say you compute, that is required to be compared with, say, one information that they have provided, buy and hold strategy. What is that? In that, say how you are going to make investment, that we are going to discuss slightly later on. For the time being, so we are going to make the calculation what will be value of the portfolio following the constant ratio plan. Again friends, all of you can very well understand that say they have provided that say you are going to reshuffle on monthly basis. Why monthly? No reason. It is required to be decided on subjective basis. Investment is going to be made in equity and debt in equal proportion. Why equal proportion? Again for that so there is no reason. We may be provided with any other proportion also. Third, if NAV changes by more than 15 percentage, only in that case you are supposed to reshuffle. Why 15%? No reason. In a way that say these things are required to be decided by the investor on subjective basis. So accordingly we are required to make the computation of answer, and from examination point of view definitely you will be provided with all this information on the expressly basis. You don't have to make any assumption. All those things will be provided to you say clearly from examination point of view. Please add an answer. A note only for understanding. First point, Miss Sunidhi is going to make investment as per constant ratio plan, comma, in which equal amount will be invested in debt and equity. Full stop. Second point, she will reshuffle portfolio, comma, if percentage change in net asset value is more than 15 percentage. Third point, investment in equal proportion, comma, reshuffling on monthly basis, comma, reshuffling if percentage change in NAV is more than 15 percentage, comma, all above values are to be decided on subjective basis. Full stop. Next point, based on above working, comma, portfolio will not be reshuffled in March and May. Full stop. So write down now new heading, investment as per constant ratio plan. So let us see that's in that case how we are required to do answer. Column number 1 is going to be month. Column number 2 is total value of portfolio. Next is the debt. Next is equity. As far as the equity is concerned, that would be further divided as NAV per unit and that is say preparing one more column, that is a column that is note, because whatever we are going to do, say that we are going to explain say by way of note. So we have to start from the month of December and so on. We are required to do answer. In the month of December, the total value of the portfolio is 2 lakhs. Value of the debt is 1 lakh. That is half of the value initially. Equity value is also going to be 1 lakh. The NAV per unit is, we understand at say 40. So over here I am writing 40 and note number 1. In note number 1 we will write something like this. 1 lakh upon 40, that is 2500 number of units are allotted to the investor in the month of December. So note in that say 1 I am writing Miss Sunidhi will invest in 2500 units. It is 1 lakh upon 40. Initially, comma, in the month of December. This is what we understand. Now the month January comes. In the month of January we can see that NAV per unit is 25. So we understand, let's say this 2500 units into 25. So as far as the equity value is concerned, it is 25 into 2500. That comes to 62,500. Debt value is going to remain same, 1 lakh. So as far as the total value of the portfolio is concerned, that is going to be 1,62,500. NAV per unit is 25. We already have calculated that the percentage change is greater than 15% on either of the side. So we are required to do reshuffling. So understand carefully that's how we are going to reshuffle. The total value is 162,500 divided by 2. So 81250. NAV per unit is 25, and I am writing over here note number 2. So in note number 2 we will have something like this: 81250 minus 62,500, that comes to 18,750. So rupees 18750, that is 1 lakh minus 81250 will be invested in equity, comma, from debt, full stop. So number of equity units will increase by 750 units. How this 750 is calculated? 18750 divided by 25, full stop. Number of equity units will increase to 3250 units. How this 3250 is calculated? It is 2500 plus 750. That is the way, so the amount of the equity investment will increase. That is what we understand. Now in the month of February, we are required to do once again the revaluation. That is, in the month of February, we can see that as far as the NAV per unit is concerned, it is 36. So what will happen, dear students, as far as the equity value is concerned, it is 36 rupees per unit. It is 36 rupees per unit multiplying with 3250 number of units. That comes to 1,17,000. As far as the debt value is concerned, it is going to remain same. So 81250 plus 1,17,000. It is 198,250. And at this point of time, NAV per unit is 36. This is what we understand.